Hello everyone and welcome to my morning report chart analysis videos with me, Rich Market Analyst at Hantec Markets on Wednesday the 2nd of May. We've got a bit of a dollar correction going on. I say correction, I mean the dollar has been so strong in the last few weeks that it's just come off the top really a touch today. We had that big strong move yesterday on thin market volumes, and maybe that's a touch of unwinding moves on the back of that, but it's interesting to see the trade weighted dollar up at that 92.50 level, which is a bit of a pivot, isn't it, over the past sort of 6-7 months. So turning back from that, but yeah, we've still got this sort of environment of interest rate differentials still playing out and pulling dollar strength, and that continues to, I think, be a key factor in the markets. But at the moment, we've got let me show you the board. All the forex majors are sort of unwinding moves against the dollar, and that is helping at the moment to just mitigate some of the weakness and the downside that these forex majors have seen against the dollar. The key factor is the DAX has broken out above 12,600, decisively broken out this morning, over 1% higher, and pulling well clear of the resistance band 12,600 to 12,647, and now it's sort of opening up a move that could see 13,000 again. FTSE 100 is also still strong, but there is a definite sort of risk positive move that you can see across these markets, with the commodity currencies also sort of the outperformers on the day. And yeah, we're still seeing this recovery this morning. It comes ahead of the Fed, though, this evening. The Fed is the key factor that markets will be looking out for in terms of market data today. Although, first of all, we do have the Eurozone GDP prelim there for Q1. That's going to be an interesting number at 10 o'clock. But more interestingly than that will be the Fed tonight. How does the Fed react to this increase in the core PCE and the inflation metrics that have sort of been pulling higher in recent weeks? Does it start to tweak the statement more positively again, and that would start to sort of see the market sort of pricing more for 4 rate hikes possibly this year? So that will be the big takeaway. No press conference tonight from the Fed. But aside from that, we've also got the weekly crude stocks. We had the API inventories jumping yesterday, and we've got an EIA inventory build of 1.2 million barrels today. Distillates and gasoline sort of around about just marginally in inventory drawdown territory. But we have seen the oil price, which is sort of stabilised. It's been in a bit of a range in the last couple of weeks, and ticking lower yesterday, but rebounding a touch. But it's interesting. It'll be interesting to see if the oil inventories jump this afternoon, then we could see a bit of a corrective move, which momentum indicators are interestingly sort of suggesting. So lots going on again today. My chart today is silver. Now, we had, as I said, that dollar move yesterday to the which affected across markets, and silver was another market that had that move. Again, sort of a breakdown below 16.16. Causing a closing breakdown, actually 16.11, but we've had a rebound today. Now there is an a downtrend in place on silver, and this it'll be very interesting to see how this recovery plays out in silver today, because you've got the overhead supply of this old sort of support around 1640. And you can see this on the hourly chart, where you've got this 1640 resistance overhead, basically just unwound some of the move. And as I said, it'll be interesting to see if these momentum indicators start to roll over on the hourly chart, and if the market sort of starts to sort of being dragged lower by that downtrend again. Momentum indicators are not too precipitous in any way at all, actually, on silver, and you didn't really get a confirming breach or breakdown on that RSI. So the high 30s seems to be where the lows of this range have come in. Lower 39 yesterday before unwinding today. So there is not really a decisive breakdown, and it will be interesting to see if, as I said, on thin volumes and how the market has reacted today, whether that breakdown is sort of confirmed in the coming days, it would need, as I said, that resistance at 1640 to kick in, and also this sharp downtrend. And at the moment, that bull candle that we've got is an unwinding move. But if it sort of continues to tick higher and then move above 1640, then you would see you'd start to see some recovery potential. 1657 is that reaction high from Friday, so you'd start to a move above that would start to sort of really suggest that the recovery is on. But for now, this is an unwinding move, but still needs to break out above 1640. But the momentum indicators, yeah, not exceptionally negative, but still it is an interesting sort of breakdown that we saw yesterday. But is it a false break? I think the reaction that we get following on from today's recovery candle will tell us all. So I wish you good luck in your trading today, and I'll speak to you later.